So now we're going to start continue from where we stopped yesterday. But the thing that we're doing differently from yesterday is very simple. I the markets have opened by 10, if I'm not mistaken. And by tomorrow, early tomorrow morning, I need to wake up early and make my analysis for tomorrow. So everything we need to talk about, which is a lot. Remember, all this time we've been talking from part one to part two. This is part three right now. All this time we've been talking, we've only been talking with regards to number one and number two of our 20 improvements we need to make to our trading um, career or our trades so that we can place more valuable trades. So what I'm going to do now, I've sat through all of those trades and I feel like the best way to solve this thing right is that we are actually going to we're actually going to improve the way as which we're going to compare all the trades, all the win rates we got from day one, all of the win rates from day one till date. That is what we're going to compare. So how do I do that now? Let's do this. Let's go to our calculator as usual. So for our calculator, excuse me, for our calculator, if you get oh goodness, why am I pick which kind of pickup is this? So for close brackets first, open another one, six, close brackets. So this is oh goodness, I just remember that this thing can only work. Okay, now out of the 10 trades for the first the one before we make any made any improvement, 40% win rate with $2 risk. So meaning four four trades were profits, which is four trades were times four times two no $4 per trade. $4 win rate per trade. That's what it meant. Then close the bracket. Close the bracket. Then plus wait, I want to know if you can highlight it. I want to know if you can highlight it. So sorry. So shift onto there's no need highlighting because I can't even edit what to highlight. So this is plus oh goodness. Plus oh goodness. It's not going to show. So we're just going to use times. Then go to times 4, positive 4, close bracket, open another bracket, then 6 lost trades, then times negative. Each low trade was $2 loss, close bracket. So this was the trades we're placing all through, and it's going to give us wait. Okay. We made a mistake. Goodness, we made a mistake. Go back. Loss. We're supposed to put plus. Then open bracket. 6 times 6 times negative 2. Then close bracket. It means 4 4% risk. A 4% risk times 4 times $4 profit per trade. No. We were not with 4. Oh goodness. Oh, I just remembered something. It was never 4. Never 4. This was where the first analysis we did was not 4. It was 3. Oh goodness. The fact that we cannot adjust this thing is annoying me. So three times 4 close bracket plus open bracket 7 times first times minus 2. So the very first it was a 30% win rate from day one. If you wait, I want to know if I can be able to pull up you you YouTube studio studio Let's know if we can pull up YouTube Studio so that we can be able to I can be able to like show you guys what I'm talking about. So sorry. I just want to be able to show you guys something. Let the thing load for goodness sake. Like the first like before we started making adjustments, the strategy was acknowledged as a 30% win rate strategy. For goodness sake, what is delaying this thing from loading? Oh goodness. So wait, content. Yeah, I want to like show you guys what I'm talking about. So sorry. Load for goodness sake, live. So so oh goodness. So this was a 30%. Are you seeing this? This thing I highlighted. It was a 30% win rate strategy. This was our actual what we were actually working on. Then from 30% win rate strategy, we we cross-checked this 30% win rate. We like the cross-checking was done to make sure that no matter what happens, the we are sure that it is not because of our greed. So when we subtracted our greed from the case, the thing switched from a 30% strategy. Let me where's my calculator? So we'll be writing it there. So it will be easy for us to be remembering. Enter. So the first one now was a 30% win rate strategy. Then then see it. So after the 30% win rate strategy, we got a fourth like after correcting it, removing all our greed from the market, it switched from a 30% win rate strategy to a 40% win rate strategy. 40% win rate strategy. Then after 40% win rate strategy, we got a 60% win rate strategy. 60% win rate strategy. Then after the 60% win rate strategy, when we're trying to adjust it from 1 is to 2 to 1 is to 3, as it's supposed to be, 1 is to 2 to 1 is to 3, it switched from 60% to 40%, if I'm not mistaken. To 40%. 40%. So you see these three, these four win rates. We are trying to compare all of them. We are literally trying to compare all of them to be sure if these our so-called strategies, if it is actually valuable at all. So starting from the 30% win rate strategy, let's go back. Let's go all the way back. So 30% win rate strategy, meaning that out of the 10 trades, 3 were profitable for $4 each. And out of the 10 trades, 7 was in loss with -2. And when we press it and say equal to, it ended up now. If we continued with the path we were running on, for it would have kept on like for example 10 trades we would have lost $2, meaning that 100 trades we would have lost $20. 1,000 trades would have lost $200. I don't know if you guys understand. It would have just skyrocketed into something crazy. So now, like literally speaking, this strategy would have left us in a cage of loss. Thank goodness that we came out and we decided that let us backtest our strategy to be sure if this our so-called strategy works. So because of greed, we would have never improved from here. Never. So now what happened? We now went, oh goodness, we now switched from there to this. So that is now we've done this, and it's very obvious that this one, this one, oh goodness, this one now would never have given us what we were looking for. Oh, but now I'm unable to remove it. So this very one would never, oh goodness, this very one would never have given us what I'm looking for. So we're moving up to this one, the second 40% win rate. So after we made our corrections and we remove greed. If greed was subtracted, this is change from 30% win rate to 40% win rate. Now let's see what 40% win rate can do. 40% win rate, $4 per trade, $4 profit per trade, 6% loss, negative $2 per trade, and the price will go. It turns out that we were in profit of $4, meaning that if we placed instead of 10 trades, if we placed 100 trades, we would have made profit of $40. If we placed 1,000 trades, we would have made profit of $400. So this strategy alone, with $2 risk per trade and $4 risk per trade, right? We would have been in a profitable stand. That is, if we remove the greed entirely, would have been profitable. But let's move on to the next one. To the next one. So the next one is where is the next one? The next one. So meaning that this is good so far. 40. This one is the best so far. 40%. Let's move to this 60% and see if it's actually good. Oh goodness. So let's move to the 60% to be sure if it's actually good. Now for the 60%, for the 60%, 60%, that is, this is 6. Oh goodness, this is 6 times $2 profit per trade, times $2 profit per trade, then plus bracket, 40% times negative $1 per trade. So 60%, let's see what 60 represents. Our previous answer was that it will get $4 per day. Now this 60% is showing us that for after these 10 trades, we made $8, meaning after 100 trades is $80, after 1,000 trades is $800. So that is what this 60% is trying to tell us. So far, this 40% has beaten this 60% win. No, sorry, this 60% has beaten this 40% win rate. Now, for this one, let's test this second 40. Remember, this second 40 is a different one. In this second 40, okay, let me. It is better to explain it live than all of this. So for this second 40%, yes, it's 40%, but for each for each trade, right? For each trade, the profit was $3 per trade, close bracket, then shift plus, close bracket, um, $4 per trade, that is times three. Then the loss was 60%. 6% with losing rate, six times, oh goodness, six times negative $1, close bracket. So this is the last one, and this is giving us $6 per trade, $6 after the 10 trades. So meaning that if we follow all these out of these four, this 60% win rate is the best. And this is this 60% win rate we're going to be working with from now on. I've been since morning, I've been trying to figure out which one would have been the best. So this 60% win rate is what we're going to be sticking with from now henceforth. From now henceforth. Now let me explain to you the most biggest shock and the most surprising thing you guys can ever hear about. This so-called strategy is only applicable. Now, let me explain. The market as a whole deals with financial indicators. Literally, if you can detect how the financial state of the market is, then you can figure out, you can be profitable. If you are not a trader that uses a financial indicator, you can never be profitable. So, because of that um, simple rule, there is no way that we are going to settle. I don't know if you guys understand. There is no way that we are going to settle for this kind of little mediocre, for this technical so-called 60% win rate. Why? Because 60% win rate on a technical indicator is as good as no win rate at all. 60% win rate on a technical indicator is as good as no win rate at all. 60% win rate um a technical indicator is completely useless. So that is why what we're going to focus on now is that we're going to look and try to convert our so-called 50% win rate technical indicator to a financial indicator. And how do we do this? We simply do this by going over each and every one of them and testing the financial state or the price action of the trade, because that is what's more important. The price action of the trade is very, very important that the we observe the price action of the trade. So now let's go over this. Where is it? This is Euro NZD. Euro NZD. Remember, the profitable one is when the risk is more. So how do we do this? Okay, let me open Euro NZD. No, I don't think we open Euro NZD because Euro NZD is not going to give us what we're looking for. If I'm to be honest, do you know why Euro NZD? Euro NZD is not going to show us 5 minutes. 5 minutes. That let's use Euro USD. Euro USD will be better off for me to explain what I'm talking about. Because with Euro USD, I should be able to properly explain what I want to do now. Let me just zoom into it. This Euro USD. Let's see if we can I can be able to. So now for this, oh goodness, this is 5:15 minutes. 5 minutes. Can this thing load? Oh goodness. So let's I want to explain something for you. Sorry, excuse me. I want to explain something for you guys. So I need the I need to open the financial indicator. Financial indicator. The financial indicator. Oh goodness. Sorry, I'm just trying to know if you can. Oh goodness, why is this thing misbehaving? Okay, okay, now it's open. So now this is the trigger right here, right? This is our so-called trigger. This is our so-called trigger. Now, the rule of this is very simple. For this trade to be acknowledged, for this our so-called trade to be acknowledged, number one, it the stop loss must be below the $1. Here must be below $1. I don't know how I plan on doing it, but I don't know if I was able to figure it out. Let me shrink it a little. Let me see if this is $1 already. So this is already $1. But based on our financial indicator, right? Based on our financial indicator, our stop loss is not supposed to be anything less than here. It's not supposed to be anything less than here. Are you seeing it? And our take profit is supposed to be, oh goodness, why is this entering? It's supposed to be two two of those lumps. I don't know if you guys are understanding. Okay, let me know if I can clear all the objects on this row. Let me know if I can clear it. Okay. If I draw this line, let's see where the thing will beat up to. I want to know if we can see where we can connect this line to, because it's supposed to lap itself. Okay, so now are you guys seeing what I'm saying? This is one. Are you guys seeing it? I'm trying to draw more. This is one. This is two. I don't know if you guys are seeing what I'm saying. This is two. This is the second one. And where's the next one? This three. Are you guys seeing what I'm drawing right now? and this is 4, and this is 5. So now this our so-called, okay, let me zoom in. Oh, yes, please zoom in. Oh goodness, oh god, short it. So our TP is supposed to be before the spike. So our TP, right, is supposed to be, well, first of all, this is the first TP, the first point at 9. It's supposed to be before the line. It's supposed to be before this line. Whatever line that you're seeing here should be a little before it. So using this one, this win rate is not 1:2. Okay, let me shrink it. It's not 1:2. Let me shrink it more. So it is not, this is not 1:2 like it's supposed to be. So this is 1:0.38. Let's adjust it to the next TP. So somewhere around here. Now, is it up to 1:2? No, it is also not up to 1:2. It is 1:1.08. I don't know if you guys are seeing all this thing here. So what do? We adjust it to the next line as it's supposed to be. No, adjusting to the next one line. What is it? 1:1.97, not 1:2. It has to be 1:2. So what do? We adjust it to the next line. So now that we've adjusted it to this line, is it up to 1:2? Yes. Now, despite the fact that this risk to reward ratio is showing 1:3.12, which is far above 1:2, we will still take this trade like this and put our stop loss, put our take profit to be somewhere here. Why do we put our take profit to be somewhere here? Because we are trying to obey financial indicator. It is financial indicator we're trying to obey. And this is what the new this one we're going. Before, what we would do, what we would do as our stop loss, right, is that this is the previous stop loss. This is the stop loss was also used. But because we are trying to avoid a week out, like one of our trades, the way it just indicated the week out, we are trying to avoid it. That's why we decided that instead we'll go up, we'll go somewhere high, this other line up, and acknowledge this line. Or we would have gone this high, but it was too far, the stop loss was too big. So normally what you're supposed to acknowledge is just the last spike. You know why? Because if as a trader you've identified a trade and what you are expecting the trade to do is go all the way down, or if it's a bullish trade, is to go all the way up. All of these things that is taking place now is going against your analysis, and it is not something you're supposed to be taking account or be accountable for. I don't know if you understand. So what we're going to do now to make sure that this so-called trade, eh, is, because as you can see, this one that we used to do experiment is has already hit take profit, as you can see. So what we're going to do now is that we are going to pick each and every one of those trades, right? Each and every one of those trades, and try to know if we can, if all, let's see if the thing affected the win rate of 1:60. Remember, our win rate was 60% win rate. Sorry, not 1:60. If it affected our so-called 60% win rate, because 60% win rate is the actual win rate that we decide. Okay, maybe you don't really understand what this spike is. I forgot to tell you. You know this spike, right? You remember the strategy is if it breaks the support zone and retest this support zone as if you just retest the support zone. Once it retest it and break the second one break and the next candle, this candle becomes our trigger. So this retest, the peak, thank you, this is the best term to use. The peak of the retest is what we are trading. is what we're putting as our stop loss. The peak of the retest. Once we pick that peak, then we'll know that that is it. So what we're going to be doing, what we're trying to use now is that, so sorry about the whole silent, no good background music. I've been that since I would have started this stream way earlier, but because I'm unable to find find a way to get if copyright free music to be playing in my background, I had no other choice than to just talk. There's no form of background music yet. So if you have any suggestion on what we'll use to help improve improve the trading as a whole, please drop it. It will be of great help. Trust me, it will be of great help. So now these are our trades that we normally use for our normal analysis. This is our normal trade. The 10 trades we placed since the beginning of this challenge. The first one is Euro NZD, GBP USD, AED USD, no AED USD, yes, AED USD, GBP CHF. What is this one? CHF JPY, Gold USD. Gold USD is one of the most domestic trade. Euro USD, GBP NZD, USD JPY, Euro USD. Okay, yeah. So these are the 10 trades. So these are all the 10 trades. So now let's go back and check the this one. This one should be closed. Oh goodness, I think we've closed out everything. Oh goodness, we actually closed out everything. So sorry. Let me get back to my normal trade. So trade. Oh goodness. So yeah, we've done it. We've brought it back. So what we're going to do now is that we're going to make full analysis of everything. I might restart the live after now again so that we will continue making the necessary adjustment. But for now, we want to sort out number one and number two, or maybe three and four from our list. The first one is stop loss, second one is take profit. Those are the two things that are on the list. So yeah, so I think we'll start from Euro NZD, if I'm not mistaken. Yes, Euro NZD. So for Euro NZD, we'll need to take 15 minutes and start shrinking. I start shrinking it so that we can be able to know if we can get this thing done. Okay, Euro NZD, shrink, shrink, shrink. Then Euro NZD is all the way back. Like this is Euro NZD, for goodness. So let's test our so-called strategy to see. Let's keep our calculator standby so that when we're testing it to so that when we're testing it to see if it okay. Let's test our so-called strategy. Our so-called strat. Our so-called strat. Okay, this is our strat. So now for our strat, see it here. The stop loss is supposed to be at the peak, the previous peak here, and I'll take profit. Sorry, let's put our line. First line here is this one. One, second TP zone. Third TP zone is up here. For me, this place is too big, too big. I don't know if I can. Let me know if I can find another TP zone in between that line, in between that space. Oh goodness, I don't think I can find a TP zone in between there. I don't think. Oh my goodness. So, oh goodness. I just hope I couldn't see anything beyond there. So sorry about that. Normally, normally we're supposed to respect them. So what happened? What's the first peak here? The first peak is here, and as you can see, the first peak is instead of 1 is to 2, it is 1 is to 1.49. Then I go to the next one. Instead of 1 is to 2, now it's actually 1 is to 2 on the almost on the dot. So it's almost 1 is to 2. So and it could not hit. So what do? We need to figure out the way. Yes, this is the TP. What am I saying? The first one was TP was hit, right? Hero ends ending. TP was hit. So the TP hit is what do we write here? We write $2, right? No, we're going to be taking the TP that is given to us. So let's just say this $2. $2. Yeah, $2. So that is the first one. Let's go to the second one. Second one is GBP USD, if I'm not mistaken. Let me cross check it. Yes, GBP USD. Okay. Now to shrink. What are we going to do? Shrink, right? This GBP USD, 15 minutes time frame, just like it's supposed to be. 15 minutes time frame. GBP USD. Let's see if it's going to play out. Zoom, 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 zoom. I need this thing to be zoomed. Really, really zoom. So for GBP USD, where is the spike? The spike is down here, right here. Here is the peak. Here is the peak. Now the take profit. Oh goodness, I think it's this. Excuse me. So the take profit. I need to actually shrink, shrink, so you can get the line. Normally speaking, right, this line is usually showing, but because I don't know, maybe it's because okay, let's let's pick the place we are working with so that when we are dragging it all the way back in the past, it will not be pissed off. I don't know if you guys understand. So this is not even close. We need to shrink it on. Yeah, we need to shrink it on. Okay. Let's know if we can get the peak now. Can we get the peak? Okay. Okay. I think we've seen something that we can work with. One, two, three. Are you seeing the one, two, three? That me I'm seeing. I don't know about you guys, but me I'm seeing the one, two, three. Okay. Okay. So this is the first one. First peak. This peak is too high. I don't know why. For me it's too high. One. But the reason why it's too high is just how it is. Second peak is this one. Are you seeing it? This is the second peak. And the next one is the third peak. One, two, three. So I don't know. Oh, it's 15 minutes that we're working with. 15 minutes that we're working with. So reset, shrink. Oh goodness, reset and shrunk. I hope the this thing I was doing is not cleared. Okay, it is actually not cleared. So let's zoom in. Is it in or out? I don't even know which one I'm zooming. I know zoom is present, but I don't know if it's in or it's out. I'm zooming out. And when the one saying it's in. So now, oh goodness. So based on the peak now, this is the first peak, which is here a little away. Now, from here, is this 1 is to 2? No, it's 1 is to 1.78, as you can see. So what do? We adjust this to here, a little above here. So 1 is to 3.1. So this is above 1 is to 2, and this is right on the peak here. So that is $3 profit plus 3 plus 3. That's the second one. Now let's talk about the other ones. Remember it's 10 trees. ADUSD. On ADUSD. ADUSD. It is shrinking up. Okay. ADUSD. Where are you? Where art thou? Is this it? This ADUSD. Let's check it. This is 16th of September 2020. Like 16th of September. This is it now. Why is it looking so incognito? So hidden. So zoom in, zoom in, zoom in, zoom in, zoom in, zoom in. So organized. ADSD, this is the peak. This is the peak of ADSD here. So this is the peak of ADSD. And the TP, you take profit. Let's zoom out. Okay, we need to put a line that we'll be using to make as reference. So actually I'll not delete all the other lines, just so that I can be able to. Okay, ADSD. Let's shrink it. Shrink, shrink, shrink. Let's go back in time. Is this 65447? I just want to be sure if that is the line. No, that is not the line. That is just the current price. No wonder. That's the current price. So what do we do? Switch to this one. All this switching. We don't usually switch it normally, but we have no other option now. Can I be able to see it now? I'm just hoping. I'm just hoping that I can be able to see it now. Please, let me see it. Let me be able to see it for goodness sake. Oh goodness, it is not aligned. I can't see it. So let's go to 1 hour time frame. We don't have no other option. Literally, no. If you think about it, we actually have no other option because if we just leave this thing abandoned, we'll not be able to get any peak. We'll keep going higher and higher and higher and higher and higher, which is actually very annoying and frustrating. 4 hour time frame now, bro. I don't think we've gotten this high before. Let's be honest. So at least now we can see peaks now. This is what I'm talking about. Now we can see peaks that we can work with. We can, oh goodness, where is it? Okay. We can see peaks now that we can work with. Oh, for goodness sake. We can see peaks to work with. First peak is this one. The next one is this one. The next one is this one. Okay. All these peaks are beautiful. Let's go back. Oh goodness. I hope I can be able to see this page. I just hope I can be able to see it. Oh goodness. Okay. This is it. So let's, oh goodness, the spacing is even too much. So let's, because literally speaking, we need this thing to arrange itself. So where is it? So 1:2 is what I'm looking for. It's not up to 1:2, right? So what do? We adjust our way all the way up to the right 1:2. Somewhere around here. Let's just say So it's like 1:4, 1:5. Yes, literally 1:4, 1:5. But we have no other option. That is where our peaks. That's where our peaks are. Yeah. Okay. So as you can see, ADUSD. Yeah, ADUSD is loss. And what was the loss? The loss was $1 loss. Yeah, surprisingly $1 loss. $1 loss. Let's go to the next one. GBCHF. GBCHF, GBCHF. Shrink, 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 shrink. I think this is the GBCHF trade. I'm sure. I'm not gonna correct. Okay, yes, this is it. Okay, this is the GBCHF trade. So this is going to respect the peak of this one, and the TP. Okay, we need to like the TP needs to be like the TP needs to be like the line and all of that. So this is one. This is one. This is another one. This peak is another one. What? Oh goodness. You know what? I'm going to zoom this whole thing out for the provoke. For goodness sake, now I have to re-zoom and all those things. Zoom in and zoom out again. For goodness sake. Okay. Zoom in now. So now this was the first one. The second one is where are you guys seeing what I'm saying? We are trying to acknowledge all the peaks. So this one, this two. Where can I get the third one? I just need like three or four, literally, like just three or four. For goodness sake, it's not even. It's just trending all the way down. Calm down, thank you. Okay, we'll see now four. In a way, we're not too sure. It's just like an in a way something. Mm-hmm. And this is the fourth one. So that is this is the fourth trade there. So let's find our take profit. Our take profit is the what is the major return. So let's zoom in. So if we come to the first line, it's not up to 1:2. Come to the second line, it's still not up to 1:2. Okay, second line, and you see, as you can see, the thing is up to 1:2. 1:2.53, almost $3. So we're definitely going to take it. I don't see any major reason why we should not take it. So 1:2.53. That is the take profit hit. So that is plus two, oh goodness, that's 2.5. Let's do it like that. 2.5. That is 4 trades so far. Let's go to the fifth one. This one is GBP CHF. CHF JPY. CHF JPY. Okay. Reset. Sure. JPY. JPY. For goodness sake, where are you? What is annoying me is the fact that I've overdrained myself. And right now, I'm not sure I'm going to be able to launch the second live, which is going to be me speedrunning the entire 20 tips that everybody needs. So, CHLGPY, this is 14th of October. CHLGPY, 14th of October. Wait, no. It seems like we passed it. Is this night? Okay, this is it. Oh goodness, I was doing it wrong in the wrong way. Okay, okay. So, oh goodness, it's on 15 minutes. That's why. That's why it's looking so shrill and sharp. So, let's look at it again. I don't know why. Okay, where are you? Please come outside. Okay, there it is. This is where it is. So the peak, the previous peak is this one. Yep. And our stop loss. This, let's see it. Let's see it, sure. Our stop loss all the way here. Yes, it's up to two. It's up to two. So obviously this is also a loss, but a loss of how many? A loss of what? Okay. Of two. Two bucks. Two minus two bucks. Plus minus 2 point what? 2 point what? It's still the same. Just minus two. So we put it like this, minus two. So it will be more easier to understand. So one, two, three, four, five. We done five. What's the next one? Obviously, gold is not something that we can work with. Why? Because even if you left go us with gold with that kind of peep distance, there is no way we would have been able to secure this thing. So we're just going to collect gold. But the problem with gold now is that we need to know how big. I don't know if you guys understand. We need to know how big our loss would have been. How block big would it have been? So let's go there. Um, gold, gold. How big would the loss have been? How big could it have been? How big? How big? How big? How big? How big? Wait, what's this? What's all these disturbance? This is not the trade. Okay? Yes, this is the trade. Okay. So the loss. What is the trade? This is the trade. Can I get this trade? The one that is opening is this one. Oh goodness, undo. Why in the world is this thing misbehaving? Let's hide it. Let's hide it. Let's close the eyes. Let's do something. Hide first. Okay. Now this is what I'm trying to work with. Now the stop loss is supposed to be at the previous peak. Supposed to be at the previous peak. Then the take profit since now gold USD is a very unique one. You know, gold USD is gold is complete. continuously increasing no matter what, because people keep refining gold, people keep buying gold, and gold keeps replenishing itself in the market. So because the gold is just exponentially big, so because of that, there is no way for us to back test and be like, okay, this is the peak, this is support zone, this is the resistance zone. There's no such thing as zone in this very trade. So what do? You result to your numbers. It will be a simple 1:2 ratio. Usually we use 2.1 or 2.11. So with this now, this is supposed to be our trade, but we lost the trade. With what? With how many? How many pips? Oh my goodness. Now, logically speaking, this pips is ridiculous. This very pip is ridiculous. Really, really ridiculous. So, but we'll still put it though. We'll put it. That's why how 9 it is. So $5 loss minus $5. Okay. What's the next one? The next one. Euro USD. I'm trying to know if I can guess that Euro USD. The also is that there are two analyses to be done for Euro USD. This is the first one. This is one we're currently interested in for the meantime. The meantime. So the stop loss. Okay, I think we've done this one already. If I'm not mistaken, this is the one we got Susan Susan so. If I'm not mistaken, right? Was this not the trade we've already analyzed regarding this stuff? For goodness sake. Is this not it? This is it. So there's no for need for us to be retesting it. So the profit is about $3. $3 profit plus $3. Okay, one, two, three. So one, two, three, four, five, six, seven. Three more. There are three more to go. GPNs and after Euro USD. I think after GPN and the USD, GPN and the first. GPUSD. Sorry, GPN and the GPN and the for goodness sake, load. Wasting my time. Out of the line, wasting my time, wasting my time. So me, I don't know why, but I think it's turning to a habit where I just simply do off. So the stop loss is going to be somewhere here. And take profits is supposed to be one is to two. Yes. This is one is to two. So this that's why the fact that it is one is to two doesn't change the fact that it's